Everybody, it is Friday, the 11th of October, 2019. This is Brian Shannon from Alpha Trend speaking. We had an up week for stocks this week, but for most of the week they were actually lower. That is until today. So let's get off of this table and take a look at the action. The daily time frame of the S&P 500. You can see, we're still stuck in this bigger box, but we did clear that midpoint of the range, which had been resistance, and that resistance had been found at the volume weighted average price from the peak. We had seen that on several occasions. We got back up to that again Thursday, pulled back to the rising 5-day moving average, and obviously today, with this gap higher, you had to be long to participate, because we did end up to participate on the long side profits. That is, we did close below the volume weighted average price for today. So I think that next week, what we really want to see hold is about this 295 level. That's where this 5-day moving average will be rallying up towards to meet, as well as, of course, the volume weighted average price off of this peak. So we're seeing still that this market is just getting jerked around by all kinds of headline risk. And today we had two little pullbacks in here. The one at the end of the day was a little bit deeper, and it did have this market close, as I mentioned, below the daily VWAP. But overall, I think that we have to look at this week as constructive, and next week we'll give the benefit of the doubt to the buyers if we can stay above 295. And the good thing is too that it's trading between these different levels, because we had seen that this was a prior important level as well, and that acted as resistance. So if we can pull back down to 294.5, 295 and hold, then I think we're setting up good for earnings season. The NASDAQ also made it back above its volume weighted average price from the high, and a similar area for it to pull back down to would be 189 to 190. If this NASDAQ can hold above that, then I think we have a chance that we can still see new highs for the end of the year. In fact, earlier in the week, I painted the scenario of a potential for a double top, and this is not a double top right now. It's once it breaks below this level here. Take a look at my Twitter that I did, I think, on Sunday for that. Maybe it was Monday, but it's not a double top until it's confirmed with a breakdown. So this is just a level of resistance we've hit twice. The Russell 2000 has been the weakest market, and it was able to bounce from this lower level, the 144.5, 145 area, in the last couple weeks, but now it's right back up to the declining 20, 50 day moving average, as well as the volume weighted average price from the December low. So Russell 2000, look at it this way: we're in the middle of what's been the range for most of the year. That is 144 up to 158, 159 as far as resistance, and we're back to the midpoint of doing nothing, and that's better than being broken down, of course, below that 144 level. Semiconductors have only closed higher than this one time. As you know, I've been talking about the semiconductors bullishly. It broke this downtrend this week. We saw that NVIDIA continues to show some outperformance, although it's been very difficult to get a hold of without taking a lot of risk, because it's been very choppy. But still, NVIDIA has been one of the leaders near term. Today, actually, we were looking at getting involved in Intel, but the gap up ruined the risk reward on that, because it came right up into this band of prior resistance. We spoke about the biotechs, of course, and this is still the weakest group. It's the one that's stuck below the prior important support level. We rallied right up to that late in the day, or today, that is, and with a declining 20 and 50-day moving average, declining 200-day moving average, I'd say just steer clear of these, especially when you look at the shorter term time frame. That it was a little constructive in the terms of becoming more neutral here, but with the bigger picture being this bearish, there's just nothing bullish about the biotech market. We've had some great trades. I mean, Beyond, I spoke about that last week as far as a setting up as a short sale. At Alpha Trends, we got short at 144.25. We've still got some left in there, and we're lowering our stops. I think right now our stop in the balance is going to be 139, which is right over here. So we're giving it up through the last couple days, but that's starting to break down nicely, and maybe from here it can just continue to whoosh lower. But don't be looking for an entry. If you're looking at Beyond, don't look for an entry until it does something like this, and then rolls back down because it's susceptible to a little bit of a short squeeze in here right now. We're also long DocuSign. I always call it Documentum, but we bought it right in here. Not buying the breakout. This is where the chasers, I think, get involved. Look at how much more opportunity you have to get involved right here. If we take a look at that 63.02 is where we purchased it. That was in here. It was prior to the breakout. And we sold some, in fact, into that breakout, which was fortunate because the next day it gapped lower. We weren't dealing from a position of weakness. So we're long part of that. This is actually, interestingly enough, what I had sketched out as a potential scenario for it on Thursday night. But there's still, the point is there's still a lot of opportunity in this market. Maybe you saw the tweet that I had shown for Valero at Alpha Trends. We got long yesterday as it broke above this little peak right here. We got involved late in the day. Fortunately, we were able to participate in that gap. The thing is, in this market that's headline driven and so choppy, there's been great action in the individual names, and that's where our trades are focused. Unless you're going to be a scalper of the short-term indexes and you have a good news feed that's right up to date, you've got to be super quick. So that's not the focus of Alpha Trends. We're interested in swing trading when there's an advantage and an edge. And fortunately, we're still finding those setups here. Have a good weekend. Thanks for tuning in.